Hi dear, welcome back to SHAN Tech. In this video, we are going to discuss about real estate crowdfunding, all about its meaning, pros and cons, and limitations. It means whether you are going to discuss about or whether you are going to invest in crowdfunding real estate, then you must know about its explanation, its meaning, its pros and cons. So, real estate crowdfunding is a way to raise money online for a real estate acquisitions from a large group of investors. Individuals and businesses can use crowdfunding to access capital from a large group of potential investors on internet platforms and social media sites. The idea behind crowdfunding is that many people may be willing to invest a small amount in such projects, and when they do, large sums of money can be raised pretty quickly. So here are we are going to discuss how real estate crowdfunding works. It's all about working out crowdfunding. And so crowdfunding involves raising capital from investors by using the internet or social media sites to reach a large group of investors. Now, crowdfunding has been associated with the donations for those in need and with equity transactions that enable small and mid-sized entities to pool money and use the funds to put money into the company's future, such as buying equipment, building a manufacturing plant, etc. Crowdfunding for investment followed the passage of the Jumpstart Our Business Start Act, which permits crowdfunding for ventures in small and mid-sized companies. That in 2012 law lowered reporting requirements for small companies and losing securities and exchange. However, it included limits on how much an investor can put money in crowdfunding offering based on their net worth and income. The SEC later enacted rules under regulations which permitted public ads for securities on the condition that all investors were verified as accredited. Regulation A Plus in 2015 enabled firms to garner up to $75 million annually from public investors. In 2020, the SEC put into effect regulation crowdfunding, which allows entities to adopt a common owner (CF) model for fundraising, which includes real estate and small businesses initiatives. A year later, the SEC increased the investments ceiling on the regulation CF from $1 million to $5 million, significantly expanding the scale of opportunities for nano-accurate investors. Now, real estate crowdfunding is similar to the equity version of it, in that an investors can buy into a property and become a shareholder. Investors don't need to purchase entire property, and they are a part of the profit generated from the investment based on the amount they invest. For example, revenue generated from a rental property or the proceeds of a sale who would be paid to investors. Some of the best real estate crowdfunding sites offer investors a low entry point. As such, you can participate starting at about $1,000. Now it's time to discuss some advantages of crowdfunding, and later on we will going to discuss the disadvantages. In simple way, you may set them pros and cons. Major benefits of real estate crowdfunding is enabling individuals and businesses to solicit a large pool of investors for their projects. Investors stand to gain by getting a small cash stake in the property. For investors, crowdfunding has much lower capital requirements than other ways of gaining a stake in real estate. Major properties investment like apartment building, offices, or hotels can cost millions or tens of millions of dollars. Through crowdfunding, investors gain exposure to these investments without putting up a significant amount of capital, and often with minimized as low as $1,000. The SEC has lifted a ban on those who are non-accredited from investing in crowdfunding activities. Previously, investors needed to be accredited, meaning they meet certain income or net worth requirements. Non-accredited investors can participate in crowdfunding for equity and real estate conditions.